let me make sure that everything is all right. Then I'll start with the explanations. Let me just paste this link real quick. I'm gonna wait for some minutes for people to join the live stream, but I wanted to do a video on this, but I figured out, let me just put this here. I wanted to do a video for this, but I figured out that it is way easier to do a live stream, and perhaps some of you might want to tune in and watch this live while I talk without any editing, without any kind of magic. Because in January, when I was doing this thing, somebody would call me fake guru or some type of stuff, and that's hilarious for me, because it would be much harder to actually fake this stuff. Like, how can you fake live live executions with real life data, with everything? It's like you cannot even execute on delay data, but that's just me, perhaps. Good, so I'll wait until it hits 45, then we're gonna go into the explanation. And that's about now. So, first of all, if you did not see the video that I put on Twitter, it was with this run up. I told everybody, because this, in case you didn't see or in case you do not know about the Forex Factory calendar, in that calendar we have the Forex news, or the news in itself, for the dollar, for euro, for everything. So today we had the FOMC Chairman Powell speaks at 11 o'clock. So it was around this time, and I actually did not watch this part from 9:30 until 11. Why? Because I know that when we have a high impact news driver to that effect, to like an FOMC type of event at 11, or somebody speaks at 11, I know that the AM session is going to consolidate. So first of all, before we even go into the prediction in itself, how good would it be for you? Because you're here to learn, perhaps, or just to entertain, but I'm just saying this for you. How good will it be for you to actually be able to predict this kind of movement right here, in order to not lose any money? Because everybody talks about how to make money, how to make millions, how to make X, Y, Z, but nobody talks about how to not lose money and how to actually preserve it. So I just totally skipped the 9:30 to 11 o'clock, knowing that I'm going to see and tape read and not trade, but only tape read the AM session, the event, because I wanted to see how smart money takes another day from the street money, from the retail traders. So let me start with the explanation. First of all, before we even start, I just want to tell you that this is my laptop monitor, but behind this monitor, I have another monitor which has 49 inch or something like this in the diagonal, and I have the 15-minute chart open for NASDAQ, I have the 1 hour chart open for NASDAQ, and I have the daily chart open for NASDAQ. And in the right side, I have the daily chart for ES, a 15-minute chart for ES, and the 1 hour chart for ES. So I was not limited to only this 5-minute chart, but this is the chart I use in order to see intraday price action and in order to form a setup. So based on the daily bias, based on the 1 hour market structure, plus the PD arrays, plus everything that I have to see inside a 1 hour chart for me to take as a trade, plus the 15-minute confirmations, refinements, everything, I stay within the 5-minute chart and I wait patiently for my setup. But for this particular AM session, for this particular event, we only used logic. So before You might not know me. My name is STO and I trade ICT concepts. So these concepts are fully accredited or credited to ICT. So I did not create this concepts. I only use them, and I use the logic of the real smart money. Now, why do I say this? I'm not saying this to brag, or it's not a title, oh, I'm a smart money trader. It is because this smart money psychology allowed me to fully predict, what happened inside the session and the last session and the last and the last and the last and the last and almost every session, but we do not trade every session. So the psychology behind this movement right here, where if you watch on that video on my Twitter, if you did not see that, make sure to follow me on Twitter. I have a link in the description, I believe. My logic for this, I told everyone that I wanted to see this level in that recording. First things first, I put this level on my chart, PM session sell side liquidity, which if I go into a 50-minute chart is this low right here, right? So I had that in mind when we were trading around here. But in the same time, while I was annotating that, I had this on my chart, which is this high right here, which is made between 2 o'clock and 5 o'clock, which is the London session. So why do I have the buy side liquidity and the sell side liquidity in the same time annotated? And we did not get to this level, by the way, but that doesn't mean that I would not be profitable. I would be very profitable with this movement here and with this movement here, but let's move along. So what did we see here that we had this idea that the price will have to go here first and then second here? First of all, let's think about the psychology. 99% of people, or 90% of people inside of the charts fail. 90% of the time, people that are trading retail concepts, and I'm still a retail trader, but I'm trading the smart money way with the smart money paradigm, with a smart money perspective, 90% of retail traders fail, right? So how does smart money capitalize on those people that fail? How does smart money make money? Well, smart money uses, not smart money, but the algorithm, because there's an algorithm that derives price, and the smart money group are the entities that trade within the algorithm, but I'm not going to talk about that now. How does smart money capitalize on these people that don't know how the algorithm works? Simply, let's think of the psychology. So first of all, a non-retail concept is the bear flag, or the bull flag in this case. So the bull flag, we have this, which looks like a flag, I believe. I don't know the concepts. And they think that the market is going to go higher and higher and higher and higher. It's going to keep going higher from here, right? So that's one thing. We got this fake bull flag in which the retail traders are going to be taken out here. Why? Because there are retail traders that are going to go long after this high is being broken. These are breakout traders placing their stop loss below in this. Boom, we take care of them. There are retail traders that are going to be short from this high. We take care of them. And then what do we have here? Why do we care about price running down after it goes up? Why did I care about price going up before it went down? Because smart money, there are still retail traders that sell short here. They have short positions, they're open positions, or they're trailed stop losses within the London session that will rest there. So therefore, how does the pairing of orders work? Because this is psychological. So the smart money entities, the algorithm lures people into buying, or they take their stop losses here and there in order to pair their sell orders right here. Smart money is selling short here above this buy side. So they're using these orders right here, their stop losses, because somebody has to lose for me in order for me to get into a position, right? So if I want to short this, if I want to short a run above this high, there has to be somebody that loses that. And I'm going to use that, and I'm going to capitalize where? If I'm shorting here, where I'm going to capitalize? On the people that are long and are currently profitable but they still have a stop loss here. So if I short here, where do I get out? Here, below this lows. Why? Because there are stop losses. So I'm accumulating stop losses here. I did not trade this, but this is the logic. And you actually saw me outline in the video, but I'm not going to talk about that because you guys want to see profits and money, of course. Who doesn't? But this is the logic in which you're going to make millions. I did not make millions yet, but you're gonna make millions and not gonna make millions if you use this logic and if you use the psychology, because you accumulate orders here where everybody loses and you give these sell orders to willing buyers. My mistake, willing sellers at a lower price. So you're selling here and you're buying back your orders right here at a lower price. And that's how I predicted this move, with the underlying bias that I saw, of course, inside the ES, that I saw that we are heavy to the downside because we didn't go into, let me just show you what I mean. I'm going to a daily chart. So in the ES, what I saw is inside the NASDAQ, inside the daily chart, we went into this fair value gap here. In the ES, we did not. We respected this daily order block and we closed below it, plus the consequent encouragement of this week, where below it. So I saw heaviness inside the ES as a major confluence for the NASDAQ to go lower. So that was the premise for my bias. This is why I truly wanted the price to go short and I didn't capitalize on anything long. Plus it was not the time period for me to trade, so I just looked at it. And going out in the PM session, let me just show you proof that I just did this, because a lot of people talk hindsight, right? So this is the chart at 11:15:22. So market maker trap, exactly what I told you. Market maker trap, false bull flag. Buy side, look at this. Buy side can be cleared as a Judas swing. A Judas swing means that we're going to go up to go down. London session buy side liquidity. This is again 11:15, and we indeed have, look at this. Overall target for PM / lunch is 14811.5. Where did I get this level? No, it's supposed to be 14891. Oh no, it was this level. Okay, so I was expecting this, right? But at the same time, if you see the video that I posted, I had a fib in which I wanted to see the equilibrium point in the current dealing range that was currently the price, in which the price was currently, and I had the sell side annotated, but that's another discussion for another day. So this was the prediction when we took the buy side. Look, I'm looking forward in trading the PM session reversal, and right here, high. Who is going to tell you right here when we're going to the upside that we're going to go to the downside to this level, right? And then we went higher. This is the AM. Now the PM prediction. This is the launch prediction that I showed to you. And then the PM short, I had a short position here, a very short one, because I didn't want to be in the market a long time. And right here, this is the PM session. Within the same logic that we used, within the same psychology that we used for the AM session, that smart money has to do what? To accumulate short positions above old highs, where retail traders that are currently short and perhaps they're profitable, they put the stop losses here. They trail the stop losses here. Plus, we also have breakout traders who went short when the market broke down below this low. So where are going to be the retail stop losses? Above this high. Therefore, what are we waiting for? This lunch buy side liquidity pool to be taken. And then what are we looking for? The lunch sell side liquidity to be taken. This is the lunch session between 12 and 11 between 12 and 1:30. So this is what I have marked up. This is what I had marked up in the chart at 13:33. So at 1 p.m. 1:30, I had this lunch buy side on my chart plus this white level, but I'm gonna discuss that later. Again, And now right here you can see this. I had this 15-minute fair value gap on the chart. This are actually from a live recording that I did, but I'm just gonna make my Twitter full of predictions, and nobody's gonna follow me because it's not quality content about Lamborghinis and millions of dollars, which I don't have as other gurus. But let's not keep that in mind. So I had this level on my chart. I wanted to see price above this high again with the smart money premise, with the smart money psychology inside of my head, that we're going to go above this to accumulate their stop losses. So when they're losing, I'm selling that short, and I'm gonna get out at this level here. But I had that level in mind. Plus I had this 1 minute BPR. Look at this, 14882 and 14879. It is exactly this level. 14882, 14879.25. Let's look at the 1 minute chart. So within the premise that I told you guys that smart money accumulates shorts above this launch buy side liquidity, what did we do? We went up. Retail traders always going higher, it's going higher, it's going higher. Boom, we plummeted, taking out their stops. Fair value gap indeed, but I would choose either this breaker. I was not in this move. I took my trade somewhere before this launch buy side liquidity pool. I took my handles out and I got out. I did not trade, but I foreseen, or whatever that word is, I saw this before it happened. So we have the retail traders buying here. They're going down. We have this inversion gap in which we traded below, because this is the buy side of curve. This is also manipulation leg, but we're not going to talk about that now. We have the breaker here. We traded below that. We had no fair value gap to trade back into, but we also have this one, which is the silver bullet, which you guys like, and it delivers for more than 20 handles. By the way, 25 handles, guys. It's $500 with one contract. This little movement right here, which we predicted easily, that's $500. Imagine making $500 a day with this little movement. And I did not even require it to go below this launch sell side. Did you notice that? So from here to here, that's 25 handles. But imagine taking this. That's double. That's $1,000 with one contract. So, if, I'm not going to talk about me, of course, but if somebody is able, somebody like me who started humbly and is still humble, if somebody can predict this market in this fashion with this level of precision, and I'm still beginning, then how much money really can there be made when that little movement right here in a 1 minute chart is $500 in this little movement? But imagine we can take the long here. Imagine we can take this short here. Imagine we can take again this long here. Imagine, just imagine this long here. That's around 3,000 plus per day. Of course, when you get okay with your model, with everything. But what can happen when somebody, and I was wrong about this level. I was wrong about this today. Who cares if I would have made $600 here or $1,000 in this movement, in this short movement right here? Would I cry because I didn't get this level? It's insane. But yeah, what would happen if somebody with this level of precision, like you can, but you're not going to listen to me because I've been telling you this since January, but yes, some of you still are outside of our groups and our mentorships, and I don't know why, because I've literally predicted every single market move, most of them since January until now. You can see that on my YouTube channel. But yeah, if somebody, I hope you guys learned something from this video, from this live stream. Honestly, if you're trading ICD concepts, then, and if you have your own model and it has nothing to do with the things that I explained today, don't let me change your model. Don't let me change your perception of price, and don't let me change your opinion on the markets if I tweet something or if I do something on Instagram, because I still lose sometimes, and I'm gonna show losses, but I just predicted the market. I cannot lose on purpose. This happened too in January, but the premise was, if you really want to get educated on how to use the smart money techniques and how to use the smart money psychology and how to truly internalize price action like I do, there is a link in the description with a mentorship that's going to fully explain these things. And not only that, but I'm going to renew all of the videos that are inside the mentorship with all the things that I've learned for the past 6 to 8 months. So, imagine for a second what you could do. I'm not saying to make millions right now. What could you do if you would have made $250, $250 in this day, which would be around this range of movement? This range of movement would have made you $250. What would happen if you get that in the AM session? Because we predicted this. We also predicted this, but we're not going to talk about that. This and this. 250, 500, 750, 1,000 a day. And it's not even hard once you get to know this, of course. So, I hope you learned something from this video. I hope you learn how to think about the markets. I hope you learn, and if you're using retail strategies, I don't mind. You can use anything you want as long as you're profitable. And if you don't want to learn how to trade, it is completely fine. You can join our signals, in which you can make shit ton of money. I actually make money from my signals channel, even though I don't trade gold, even though I don't trade the US 30. I have an account in which I make money with them. But if you wanna make money without trading, then of course you can go to our signals channel that is in the link in the description. But if you truly want to get educated and do this on your own, which I also recommend for you because you want to be independent, of course, you can sign up with the link in the bio, which is something like join our mentorship or something like this. And if you have any questions, don't forget to DM me on Insta or on Twitter or wherever you want, because I'm going to respond to it, because I understand your pain and I understand that you want to learn. And for those that truly want to learn, I'm there for them, even though they're not on my mentorship sometimes. So that was pretty much it for this video, guys. I hope you enjoyed this one, and I'll see you in the next.